Hi, and thank you for joining us for our live webinar on Forex and Indices Market Outlook. This is Jeremy Fu. I'm an account executive with Phillip Futures. In today's webinar, we'll be discussing some of the outlook on the major FX pairs as well as the US equity indices. Before we begin, I would like to do a sound check. If you can hear me loud and clear, just type yes into the question box. Also, during the webinar, if you have any questions, do type them into the question box and I will address them during the Q&A session at the end of the webinar. Great, looks everyone can hear me clearly, so let's begin tonight's webinar. Yep, hi, so this is Jeremy Fu, and today the webinar will be on Forex and Indices Market Outlook. My name is Jeremy Fu. Yep, today is the 25th of March. Just get started. So just a short disclaimer, so all the information here shared today is actually just my own personal opinion. It's not actually any recommendation for any trades. Yep, so do trade at your own risk. So just a brief through on our agenda for today. So what I'll be starting with will be the Forex major pairs outlook, and then after that, I'll just go into US indices, Dow and S&P, the index, and a few things I just want to cover at towards the end will be some of the biggest misconceptions about trading that I've heard, that I have. Some risk management, obviously, that I always reiterate. Then after that, why should you choose Phillip Futures? And then getting started trading with Phillip Futures. So a little bit about me. So that is a picture of me. If you're wondering what I look like. So I'm a licensed MES representative with or remiser with Phillip Futures. And obviously pre-COVID did specialize in seminars. But obviously since the pandemic we have moved to online webinars. So yep, specialize in forex, futures, options on our futures. So the futures we have financials, commodities, index, and then we have CFD, which also ranges from commodities to index to equities as well. So what I can do is actually try to fine tune your trading strategy, as well as help clients understand market movements to better their trading. So since I mean obviously pre-COVID seminars, but since then we have done webinars. So actually I've done a number of webinars since then, starting last year. So you can actually just go to our YouTube channel, Phillip Futures, and we can check out some of the webinars that I've done. Mainly on the forex, I've done one on futures as well as a little bit on a quick 3-minute video on US market outlook as well as the major pairs indexes. So just take a look at the, so I'll just dive right into the outlook. But just before that, I just want to just take a quick look at what the dollar index is actually doing now. So the US dollar on its own. So just to have a little picture on where we're at now, and where are we looking to in the future. So if you just take a look at the chart for the dollar index, we had a decline in the 2020 year. After that, some sideways movement, we had a dip down, and now we're actually hovering and testing that resistance at the 92.50. And actually, I'm looking that the dollar index will actually move higher to that 95 region, which is that line over here that you can see. Actually, there is some buying momentum going on there, and so actually I do see the dollar index moving upwards. So obviously with the dollar strengthening, we're going to see some pressure on the major pairs. So just keep that in mind. Just switch over to our MT5 platform. So yeah, just a quick run through of the MT5 platform. Those that are unfamiliar, just to kind of get a feel of what it's actually like. So this is our MT5 platform. On the left hand side here, you have the market watch, which you can monitor and edit to your own preference, whatever you like, remove whatever you don't like. So you just want to add something, for example, let's say the dollar yen, you can just add the dollar yen. It will come up here. then just add it. It will come up to your watch list. Yep, since I've already added it, so it's here. Below here we have the trading tab. So once you place a trade, you will have it running here. You will see it pop up here, and then you have a running profit and loss from there as well. So obviously here is the chart. You can right click to change the time frames, whichever you like, 1 hour, 4 hour, daily, weekly. Yep, and then if you want to insert indicators, go to insert indicators, and then you can add your, whichever indicators that you like. Okay, so I just dive right into what some of the outlook lah for the pairs. So I'll just start with the euro dollar. So yep, I'll just start with the 2019. So in 2019, we actually had a long downtrend of the euro, strengthening of the US dollar during the pandemic last year. You see the long decline here arrow, and after that, we saw the pair actually subdued in the 108 levels before, after like post COVID, and then once equities started to kind of really pick up and recover, then we actually saw the euro, the US dollar weakening, and then the euro strengthening. So you see it coming up here, and then enter into a consolidation over here. So we had some sideways movement here. So it was actually a 4-month consolidation and a range between 1.16 to 1.20 until it broke out. It broke out, made a run to the 1.23 levels right over here, and then where everybody thought, okay, we might be looking at 1.25, which is an area around here, and then maybe even the 1.3, but obviously that was short-lived, and then we saw a decline back again in the euro. So if you just change the time frame to get a better look here, just zoom in so we can just take a look. So I actually thought that the 1.20 support would hold, but obviously it did not, and here we are right now. So definitely let go of the 1.19 handle. Thought it would retest back up. We can see this retest over here and here, but yeah, obviously it did not happen. And then there was a sharp sell-off, and now it's barely holding the 1.8 level. Yep, so it's barely holding the 1.18 support, which is somewhere around here, which is where we are now. So the sharp sell-off on Tuesday, today is Thursday, so the sharp sell-off on Tuesday was huge, 100 pips down for the day, and yesterday was dropped about 50 pips. So it kind of seems like there was some of the strong selling pressure has sort of eased slightly. And the overbought conditions sort of on the stochastic kind of shows that it might not be a sharp sell-off anymore, but more, I'm expecting more like a drift towards some of the, retesting some of the supports, like 1.1800, 1.1780, and then 1750, and then maybe even 1700. And ultimately we can see a move down towards, I'm expecting a move down to at least 1.16. I mean, we have to assume so. So expecting a move down here. 1.1850 should act as a resistance for now. The next one should be 1.19. So actually from the 1.16, if let's say we get there in the next few weeks, I'm assuming, or maybe even months, I'm actually really feeling a strong buy at the 1.16 level, as the expectations for a strong rebound and a rally might happen from there. So don't know where we'll reach the 1.6, might be a few days or a few weeks. In terms of fundamentals, a few of the Europe countries are not doing too well in terms of a pandemic. You see a resurging of the virus. Germany has re-entered a lockdown until the 18th of April tentatively. So we might see some, weak Eurozone data coming up in the next few weeks or so, and that might actually continue to weigh on the euro. And especially, if the US dollar is going to strengthen, it's going to receive more buying momentum, we might see it dip even further. Whether it will break the 1.16, I don't think so. But yeah, only a move quite strongly above the 1.1950 level, which is somewhere about here, and then to test that 1.20 level, then I might, the pair might be changing to look a little bit more bullish. But all in all, the pair looks kind of bearish now. Yep, it has to close above that 1.20 on a daily closing basis. So break and close above 1.20, then actually I can see it retesting 1.23 and then maybe even 1.25. But until then, we can assume maybe some broad consolidation or ranging between that 1.16 to 1.20 level. So yeah, obviously prefers selling for now, downwards towards 1.16. After that, it looks like a bounce might happen from there. Uh, Another of the euro crosses that is might be a little bit interesting. Maybe you just want to take a look at. It's actually the euro yen. So actually, we can see the euro yen here is actually on a 14 years downtrend. And actually we saw that squeeze here. If you zoom in this portion, it was slightly squeezed. That was the post FOMC, where equity markets started to recover and really make new record highs. So this is a pair that actually I look that it will be weakening towards at least 1.25. So maybe just something to look at. It's a 14-year downtrend, so the resistance there is pretty strong. So maybe you just want to take a look at this, some pair that you might be interested to look at. The next would be the pound dollar. So since the UK has actually left the EU at the end of January 2020, we saw the pound dip lah. So this was the dip here that you see. And then before starting a very choppy, broad uptrend that actually seems to be coming to an end. Yep. So you actually can see, yep, the big broad trend line from here, which actually ranged from earlier last year to recently only. So just to zoom in a little bit here, change the time frame. All right, so the 4-hour time frame gives a little bit more, although it looks a bit more choppy. But yeah, so since then, after it did a false break here or test of the upper trend resistance, we saw some sideways movements here, and then we saw the break of that 1.38 resistance, which was actually pretty key. After the next one that was actually pretty key to hold was the 1.3750, which did not hold as well. And then we had another breakdown towards the 1.36 level. So actually, yeah, you can see a breakdown of the pair. And actually, I mean, overall, the pair is looking pretty bearish. And since the pair was actually trending up for so long, actually see a bigger breakdown or retracement of the pair. At least, if the 1.36 doesn't hold, probably even 1.35. And then the key support to hold would be this level right here, 1.3584 to 1.3475. If it breaks below that, we can even see a retracement back to the 1.3150 level. So yep, still looking pretty bearish. The pair looking pretty bearish. Pound also looking pretty bearish. So yeah, just some of the key levels you want to look out for. 1.35, you might try a buy here, see if it bounces up from there. And then, during this support zone, if it breaks, we can see a retest back to 1.31 possibly. So another one of the cross that might be quite interesting to take a look at would be the pound yen. So the pound yen was actually going up a lot, and then after that, it sort of topped off here at the 152 level, and then after that it came down. Yeah, and then we see it kind of hovering around the 148. But I like to see the pair testing 147.50 at least, and then even 145. So my target would be 147, then 145. So maybe something safer to be selling would be the pound yen, or maybe you can do simultaneously selling this pair also. The yen looks a little bit strong, so yeah, we might see a test of these levels. One of the crosses you might want to look at as well. All right, so the next one would be the dollar yen. So since the start of 2020, the dollar yen was in a deep downtrend, as you can see from the chart. You can see that broad downtrend from the start of 2020, and then we see the spike, which is here in COVID season, before finally starting to fall again. So I thought after that broad downtrend, I thought we might see a test of this low of 101, but obviously that didn't materialize. So since 2020, we see the pair break out strongly, as you can see, above 108 and even test that 109 level. So for like about 2 weeks, it was struggling to hold the 109 level, and then after a while, the pair sort of gave way and started trading sideways for a while. So you can see that sideways, and then it's actually it's actually sideways from there, and then after that it since bounced up. It looked like it was declining, but it since bounced up. Just go to the 4-hour time frame, you can see the bounce. Yeah, so it looks like it was going down. People say this was a bullish flag pattern that might be happening. Whether it was the flag pattern or maybe it was just a rebound from that 108.30 support, yeah, whichever it was. I'm fairly neutral for the pair now, and I actually wait for a move if it can break that 109.30. That resistance is actually pretty key. So if it can break that, we can see it test maybe 110, 112. Yeah. And if the pair breaks 108.30, we could see a test, of that 106, 107 levels again. People say that consolidation, if I go back to here, people say that consolidation around, on a higher level signifers move higher. Yeah, maybe. But yeah, the key would be 109. So if it actually breaks the 109 and break and close above 109.3, actually can see the pair moving higher lah. And if you go to the weekly time frame, it actually lines up extremely well on this. If you draw your downtrend lines, it's actually testing this level, which is exactly where it is now. So yeah, obviously, if it manages to close above, this could be a break of the downtrend channel, so to say. And then we can see it test some of the highs here, some of the highs here lah. So yeah, this is what I'm looking at the dollar yen. Look whether it can break 109.30. Otherwise, it might just continue ranging sideways, sideways between 108.30 to 109.30. So the next one is the Aussie. So just zoom out. Okay, so if you can see, the Aussie was in consolidation, which is over here. in the second half of 2020, had a strong run up late 2020, tested this year, tested 0.80 before a strong move downwards. Yep. So people would say this looks like a head and shoulders pattern. I can draw it to show it to you. Let me just So I mean, if you have if you have a bit of imagination, yeah, this is what people were saying. And then this was the second part of the shoulder, lah. So this was the shoulder, the head. This was the other shoulder. So head and shoulders pattern. Um, whether it was going to hold, whether it was going to reverse, yeah, it kind of broke down. So yeah, whether it was the head and shoulders pattern or just a bearish reversal from there, not too sure. But yeah, the next go-to hole would be 0.7560, which is this line here. If it breaks that, we could see a test of 0.7520, 0.75, and then ultimately 0.430, and maybe even to that 0.33 level, which was where the run started from, which is here. So yeah, overall the pair is, I mean, my view is that the pair is looking pretty bearish. Any bounces, up towards 0.7650 or 0.7675 can start to sell. This level over here should act as a pretty good, just draw a line here. So yeah, this anywhere, as long as the pair doesn't break 0.7700 around there, I see the pair moving lower. Yeah. So yeah, overall still looking pretty bearish. I'm favoring selling for now downwards. Yeah, towards the 7.5 and then even 7.4. In the next coming days or weeks now. Yeah. I just do a quick one on dollar Sing. I know quite a lot of people trade the dollar Sing. So yeah, the dollar Sing was in a broad, downtrend. Since 2020. So after that, we saw a broke out, and then the pair hasn't been doing much the last few weeks or so. So yeah, so if you just take a look, yeah, it's probably going to range, until it breaks either the if you want the exact one, would be 1.3385, that would be the support, and then the resistance would be 1.35. So obviously, if it breaks 1.35, we can see it test, some of the levels above 1.36, and then even maybe 1.37, some of these highs from here. Just a nice color. So yeah, we can see it testing some of these highs from here. Yeah, and then here. But let's say if the 1.3385 support doesn't hold up, then we can see it testing some of these floor lows, like 1.32, for example. So yeah, for now, anything that dips, maybe you can. I'm favoring longs, and then afterwards, if it manages to break 1.35, we could see an easy run, and then you can start buying up from. It's probably going to break out, one until 1.36. So yeah, that's for dollar Sing. The next would be the US index. So Dow Jones. I'll start with Dow Jones, and then later we'll do S&P. So we saw the dip. You see the arrow down here. This was the dip during COVID. And then since then we had elections, vaccines, stimulus. We had quite a lot of things in the 2020, which we saw some immense volatility, as well as a major run up in equity markets, as well as the indexes. So to make new record highs by the end of 2020. So you can actually see that before 2020 ended, they already recovered fully pre-COVID. This is the level here. So obviously they closed, Dow Jones closed 2020 year positive, so that's 100% recovery, and yeah, making new highs since then. So where are we right now? So actually, it continued run up all the way since then. Uh, some dips, but yeah, it has been really strong, and we kind of topped up at the 33,200 level. Um, just zoom in for you. So yeah, you can actually see that, and then just nice, it kind of lined up. Last Friday there was the announcement of the end of the relaxed SLR. If you don't know what SLR, that's the supplementary leverage ratio of the US banks. So basically, it just means that banks need to hold less capital now, which means encouraging banks to lend out more. So that obviously to lend out during the COVID season to help people with finances and all that. So they announced that they're going to end that at the end of this month, which is 31st March, and then we actually saw some sell-off lah. So just nice, we had some sell-offs on the Dow, um, especially as some equity markets as well. And from the bank shares, yeah, obviously contributed to the Dow, and some dampened risk sentiment lah. From the Europe side, Euro countries going back into lockdown, vaccinations not going extremely well. I mean, in that part of the world. So what I actually can take my take on this is actually markets have already priced in the stimulus. Uh, Obviously, yeah, the stimulus, the low interest rates until at least 2023, which is apparently what the Fed, which is the central bank of US, has said, which is actually positive for equity. So that more or less it seems that markets already priced that in. And obviously, if you don't know what that means, the lower rates just basically means that people have higher spending rate or more cash to spend because you're paying less on your interest payments, and therefore you have more money to spend, to put it simply. So what I actually see for the Dow, I mean, moving forward, in terms of technical wise, this candlestick at the top, which is the 33,200, if you can see, that actually looks like a bearish shooting star pattern on the chart, which is actually a bearish reversal pattern. So it's actually found in an uptrend, and it signals some bearish reversal in the market So what I'm actually looking at is that it doesn't seem to be holding too well, the 32,500 support. So we have to take a look at the next one, which will be around the 32,000 or 32,100 support. So I would approach with a little more caution if you're trading the Dow. You can still buy the dips. I don't see the pair like doing a massive move downwards. But I actually put some of the levels that you can actually look out for. Maybe some levels that to start to buy at. I don't think the pair is going to dip like crazy, mainly because fundamentals are actually relatively positive, relatively okay. In the US, is getting vaccinated slowly, but definitely it's on the way and actually doing a pretty good job. So as people starting to get vaccinated, people start going to work. You start to see the economy really picking up, job reports picking up again, and that's going to signify a recovering economy, and we can see stock prices move even higher, and therefore it's going to push the index even higher. um yeah, so the next ones you can take a look at will be 31,800, 31,300, and then finally will be 31,000. I don't see it moving anywhere lower than that for now, at least. I don't see, for now, I don't see a reason for it to be moving up, moving down like crazy. So yeah, I think you would see some caution, and I would advise some caution going into, buying the Dow. Some of the levels you want to take a look at. That 32,000 support is going to be quite a strong one. So yeah, just take a look at that. See what it's like. Yeah. So the S&P is actually pretty same. You had that dip, that dive down, COVID season, and then afterwards run up all the way, and then where we are right now. So this, my take on this top off here was actually a false break lah, or maybe people might say, it's a double top kind of candlestick pattern that's going on here. So yeah, it doesn't, obviously not holding the 39,000 level anymore. So the next one that will be quite key will be the 3860 lah. So 3860, and then maybe even, a dip towards 3820 and then 3780, and then ultimately I don't see it moving below 3740 for example. So 3860 is one of the keys to hold. Yeah, and then afterwards I do see it might go up from there, kind of a reverse arrow, kind of just moving up from there. Might dip and afterwards, move higher. So that's what I'm kind of expecting. Some just dip, but as the US economy is going to recover, stock prices are going to keep going higher. And then yeah, we should see there's no major events that are occurring in the US. At least not to my knowledge, or they have announced. I mean, besides the Fed meeting every month, but no major things like, elections or anything. So and no reason, once the pandemic recovers, everything should start recovering, and I don't see it dropping very, very far from there. So yeah, still looks relatively positive. We might see some dip, you know, or some retracement towards these levels, and then afterwards, yeah, from there you'll probably just pick up from there again. So yeah, that's my take on the US indexes. Yeah. So yeah, let me know, in the future, if there's any products that you want me to do analysis on, and we can just take a look at. Yeah. So I'll just go back to the second part of my presentation, which is some of the misconceptions of trading, and then we'll just yeah, we'll wrap things up from there. So I feel like some of the biggest misconceptions of trading that some people have would be, firstly would be I need an expert advisor, or EA, or AI, to sort of beat the market. And then the second one would be I need finance or economic background or education, to be a successful trader. And then yeah, I need to be smart to become a successful trader. And then lastly, trading is very risky. You could lose all your money. So I just address some of these things. Hopefully, you'll feel better, more comfortable trading. Or if you're a new trader, maybe you want to get started, learn something. Start on a product, whether it's FX, equities, futures, start on something. So just address the first one. I need an expert advisor or EA to beat the market, so to say lah. So I think it's no secret that there are a lot of banks or hedge funds. They actually have or they use algorithmic or robot trading lah. So yes, it's probably profitable, but that's because they spend hundreds of thousands or even millions developing a successful EA or AI robot for their trading. And obviously, as a retail trader, we do not have those kind of monetary resources to do that. So, well, from what I know is that if you're IT savvy, you actually can develop your own EA or work or pay someone to help you do it lah. So if you do EA, you can design your own. If you know IT or coding, you can develop your own EA. Otherwise, from what I know, is that actually Meta Codes, which is actually the company that designed the MT5 platform, our platform. There's actually a forum where you actually can post uh, things, post. Mm, Find someone to you actually pay someone lah. So you tell them what are your specs, what are the indicators you want to follow, what are the contracts or products that you're trading, and then just pay him to develop an EA. But that's another question. So for me, is do your own analysis, read reports, read news, learn indicators, and hopefully you can definitely be a successful trader if you have good risk management, proper discipline. So we'll get into that. So the second one, is that I need a finance background, economics background. I need to learn trading. Well, everybody started somewhere. I don't think people born traders. Maybe some are, but yeah. So I've met many retail traders. Some are beginners to advanced, part-time traders, full-time traders, and even a few trading coaches. And they don't ever talk about having a finance background, economic background, but there's a few things that they always talk about. First thing will be positive mindset. So obviously, one bad trade does not mean all is lost. Obviously, losses are part and parcel of trading. So there are days that you're gonna lose, and there are trades that are not gonna be good trades. But that doesn't mean that you're a bad trader. Yeah. So the second one will be trading discipline. So having a proper risk management strategy with good risk to reward ratios is every time when you have a bad trade, it's a $200 loss. But every time you have a winning trade, it's $100. Then you're gonna have a problem. You're on a losing end, because every time you need two winning trades to break even on your one losing trade, which doesn't make sense. So you gotta have proper risk to reward ratios to grow your account and be successful ultimately. The third one will be understand your product. So obviously don't follow blindly. Uh, know what you're trading, whether it's FX, whether it's CFD, whether it's cash stocks. Know what you're trading and understand the risks. And then lastly will be market analysis lah. So fundamental analysis, technical analysis. Don't trade blindly. Don't be that FOMO, that fear of missing out that people are talking about, the GameStop. Some people made crazy amounts, but if those people that just traded blindly just went in and instead end up losing lots of money. So yeah, know what you're trading and don't just follow just because everyone's following. Do a little bit of your own analysis, and then yeah. So obviously more analysis equals higher chance of success. So successful trader. So I actually believe anyone can be a successful trader. It doesn't have to be because you came from a finance background, or you work in finance. So many retail traders, working so many different jobs or from different backgrounds, yet some are successful. It's question is, I think the number one question is, how bad do you want it, lah? If you rather watch Facebook videos all day about making money, then probably trading isn't for you lah. But if you rather watch one less video and actually spend that time watching or reading an article on news or trading to get started, then you might be ready. It takes a level of dedication. You have to check on your trading account. But yeah, a lot of the systems are automated, and we can actually get into that. So actually, two of the favorite quotes that I have. So never confuse education with intelligence. Just because he left school doesn't mean his education and learning stopped lah. So whether it's trading, or investment, it's something that you want to get into, then yeah, maybe talk to me, have a chat. We can have a chat about getting started. Hopefully, I believe anyone can be successful. So the last misconception that I think these people have is trading is risky. I can lose all my money. These kind of things that you always hear. So it is not false, but it's also not absolutely true. If you do have a stop loss, your losses will be minimized. So trading platforms are automated now. In the MT5, you can put a stop loss, you can put your take profit. Um, and if you have a stop loss there, your losses will be minimized. You will not have a case, where you wake up and your whole account is gone if you have a stop loss. But it's also untrue that that you can lose all your money. We have a auto liquidation system, so there won't be a event where you will lost all your money or your account turned negative. So yeah, just for reassurance. So let the system work for you. And then as long as you have a stop loss, your losses are minimized. Yeah, let the system work for you. So yeah, trading is not a get rich scheme. Yeah, if you're coming to trading thinking, I'm going to get super rich really fast, yeah, sorry to tell you that's probably not true. uh it's a process lah. It's something that you have to go through. Someone, promising you, if a broker is promising you crazy amounts of profits in a short amount of time, it's probably not true lah. Something too good to be true is usually not true. Yep. So trading and investing is a journey, a process. There is a level of commitment, work, and dedication for it to succeed lah. So yeah, like I said, you have to be committed to it. If you're half-hearted about it, then probably you will see yourself making not so good trades, cutting losses too late, and therefore resulting in losses. So the fourth point, bad trades. If you can't take losses, if you're not someone, if you someone that really hates losing money, then you're probably better off working for that per hour salary, or investing in a fixed deposit where you have zero risk, and it's just upside from there, probably slow, but yeah, no losses, at all. Trading, nobody can be 100% right. If someone can be 100% right, that's probably not true. So yeah. So the fifth point is, a lot of people ask me, isn't trading just like gambling? So I would actually like to think, when you're in a casino, you're gambling, playing a card game, and you're hoping for that, one card to come, and between analyzing data to actually calculate the probability of your win rate are very different things. So I actually think that your analysis and your risk management actually draws the line between trader and gambler. So to me, yeah, it's not absolutely like gambling. You don't have a 100% win rate, but you can calculate your probability, and hopefully probability will be in your favor. So yeah, yes, I have to reiterate this every single time, so that people just know it, and you know yeah, just get used to it. It's a really good habit to have. So yeah, always have a stop loss. It's just easy to remember. Losses are part and parcel of trading. So it's better to take a small loss now than a big loss in the future. Without a stop loss, you could wipe out most of your account. I think most those experienced traders have probably gone through that before. You have days or even weeks of profits, and then you just pick that one time. You didn't put a stop loss. You decide to be a bit of a superhero. Didn't want to cut loss, and then when it was too late, you cut the loss, and it just erased days, or even weeks or months of your profits, and that's not what we want to do. So I always encourage my clients, everyone, put a stop loss. There's another day to trade. That trade was just a bad trade. Every day will not be like that. So do not move your stop loss to prevent your losses. You could have stopped out, flipped up, and then flip direction and be profitable. So yeah, do not always focus only on your entry and exit, but also your stop loss lah. So number one reason why most people are unprofitable, or why retail traders are, you hear a lot of sad stories, it's just that taking profits too early and cutting losses too late lah. I think that's the number one reason why a lot of traders not successful. Yeah, I hear a lot of sad stories. So yeah, all boils down to training discipline. Yeah, get that, and then you can be successful. So yeah, how to get started? What you want, like maybe you get started on the demo platform, just to familiarize yourself with the platform, try that for 1 to 2 weeks. And then after that, open a trading account with us. I mean, if you like what you saw, you like the analysis that I do, then open an account. Um, as long as you start trading with us, I'll be happy to share all my analysis with you. It comes with the perks of opening an account with us under me. So then afterwards, what you want is to get started on a live account, small volumes with proper risk management. So just putting that stop loss in play, and then afterwards just getting the feel of it, and then afterwards you can increase your volume from there. And then afterwards obviously is learning your own fundamental technical analysis, and then after that, once you're very good, obviously I'm pretty sure you have your own view, your own trading style that you want to do, and I'm happy to actually fine tune your strategy or see what's going wrong, what's going wrong, and to give my view on the market. So yep, how can I help you? So if you read a lot of the reports, or if you see a lot of the reports online, you tell you that, oh, like euro dollar fell by 1% last night or 80 pips, only kind of helps you to a certain extent. You can always check prices on your own to see the rise and drop on your own trading platform, or there are a lot of like online platforms that you can check. So I think what is crucial when you're trading is actually to predict, or try to predict as much as possible how the price will move today or for the next few days or weeks, so that you can be place that probable winning trade. If you're just reading like the euro dollar fell by 1% last night, then there's always that question in your mind, oh, is it going to continue going down today, or is it going to rebound? So with that analysis, you get that whether it's going to continue going down, or is it going to rebound, where is it rebounding to, what are the levels to look out for. And that's what I say. I provide my view, covering the major pairs, US indexes. I do on gold as well as crude oil. So predictions for the day as well as key technical levels, as you can see from my analysis today, from what I shared. And I do this every single day. I send to my clients every single day, as well as news updates, as well as upcoming events lah. So if a central bank president or leader is going to speak, I tell them, as well as any events that could affect prices coming up. So what an example of what I kind of sent. So this was sent yesterday. So you can just have a quick look. It's analysis on what's to come. What to look out for. Am I bearish? Am I bullish on the pair? So yeah, this is some of the things. The other thing would be the economic data table. I'll just take a look. Just show you for the next slide. So just highlighting some of the holidays and the key events for the week that are coming up. As well as if there's NFP, non-farm payroll, that's an important US job report, first Friday of every month, that's important. So I'll write a little bit longer. As you can see, yeah, this one I write a little bit longer. And actually what I expect or what I predict for the market, I take a look at a few articles, and then yeah, what's to come lah, basically. So this will be the economic table. Yeah, I sent out on Monday. Just to keep this was this week. This week's table, if you can see. Yeah. So today will be Thursday. So shortly after 8:30 we have US GDP data, jobless claims, and then tomorrow we have the UK retail sales. We have some euro thing, and then we have the EU Euro summit lah, tomorrow as well. I think starting sometime in the afternoon, like Euro time. So yeah, they will just discuss some Eurozone issues and policies. So just to keep my clients updated, what's happening, what to look out for. If you're a technical trader, maybe some of these big events you might want to keep out of, just so you don't get squeezed or stopped out, a little bit on that on the technical side. So yeah. So yeah, there's a lot of like free websites there. You can just take a look, where I get some of my analysis from. So, for data, economic news or economic calendar, as they call it, Forex Factory is really good. It's actually very user friendly as well. And then you got CNBC, investing.com, Daily FX, all these are free. FX Street also free. Market Watch also, you can see some analysis, prices there. Bloomberg, you only get a few articles per month. But yeah, you can take a look. A lot of these stuff that are free, so you can just take a look. The more you read, the better you get. The more analysis you get, you get a better probability, a better idea of where you are, where people think that the market's going to move, and that's probably where the market's going to be, lah. So some things to consider, obviously know and understand the product that you're trading and the risks. Choosing the right broker, you want a broker that's regulated, so your funds are safe. Obviously, you don't want a broker that charges you every time you deposit or withdraw funds, so we do not have that. Overseas transaction, yes, there's the TT transfer, but local bank, obviously free. Yeah, so obviously, yep, you want ample support. So I'm here for you. The company, is very supportive of all clients. Reliable and stable platform. You don't want a platform every time high impact events. The platform lag, close, cannot place order. So yeah, we don't have that. MT5 is very stable. So yeah, not to worry. Yeah. Yeah. So some of the just wanted to share. This happened January, I think, this year. They posted a story about the Singapore doctor, basically dealing with an overseas broker somewhere in Romania, and then he lost somewhere between 11 million to fund his online trading, and apparently it was all a scam. It was all a bogus trading platform. So yeah, I just wanted to share. So yeah, just be careful if you're you know thinking of opening an account with an overseas broker that doesn't sound too creditable. And yeah, just to share, like, there are these cases that are popping up all over the time, and just to be careful, lah. So for me, I would prefer local broker for safety, ease of the mind. So yeah, just to be careful. I mean, if you are thinking of an overseas brokerage company, yeah. So why should you choose Phillip Futures? Some of the services and perks that we have. So yeah, we still have a one-to-one broker service. So each trading account is actually assigned to a designated broker for servicing. You don't actually have to pay anything more for that kind of service. So all the commission rates still apply. So if, let's say, you decide you like what you see today, my analysis, yeah, I'll be personally in charge of your account, and then you can contact me for any of your problems, issues, or you ask about the market, this kind of thing. Yeah, ask me. Other than that, we have a general hotline open from Monday to Friday, 9 a.m. to 6 p.m. We are not like if you call Singtel, for example, no one picks up your phone for hours, or if you call bank, no one picks up. So they should pick up your phone. Hardly any waiting time. Sometimes immediately someone will pick up the phone. Besides that, we have 24 hours IT hotline. So Monday to Friday, you can give them a call. Even yeah, 24 hours. 3 a.m. you want to give them a call. You got platform issues. Yeah. Besides that, we also, for futures trading, we have a 24 hours dealing desk hotline for call-in trades. Yeah, so 24 hours, Monday to Friday. And then fund deposits are received and credited in your trading account within the hour. If you did it properly, included your trading account number, anytime, 24 hours, 5 days a week, the system will pick it up and then deposit the funds into your account within the hour after you transfer, or even faster. So we have same day withdrawal and transfer of funds. If you submit before 9 a.m., we will transfer the funds to you by in the afternoon. We also have trading statements sent daily via email. So e-statement now, we don't have hard copy anymore. So every morning they will send you trades done for the previous day, any open positions, your account balance, or commission charges for the day before. So you can just take a look. That's one of the good things as well. We also have no additional charges if you do not trade. There's no hidden charges besides anything that we have told you. So yeah. So yeah, you can open your account online now. Obviously, it's very easy from wherever you are. So if you're using your SingPass, Singaporeans using SingPass, you just need your bank statement. Besides that, if your residential address it's all the same as your mailing, then no problem. Then only bank statement. For foreigners, we do need your passport, work permit, employment pass, and then sometimes supporting documents for mailing or residential address for yeah, overseas based clients. So yeah, this is the account opening. If you do go through the form, and if you like me to be your broker, do indicate my name. Otherwise, your account will be assigned to a random broker. Yeah. So if you do like, and if you like me to assist you along the way, just include my name on the third page of the account opening, and then yeah, otherwise use the QR code. It will be automatically tagged to me, so use the QR code if you want to scan. I'll show another QR code at the end when we do Q&A. So yeah, scan the QR code, and then yeah, we can, yeah, it will straight away open to me. So yep, my name is Jeremy Fu. My handphone number is there if you want to take a picture. My office line is there if you give a call, but preferably on my handphone, as yeah, still working from home currently. So yeah, otherwise drop me an email, no problem. Otherwise, if you want to meet me, whether it's outside the office or you want to drop by our office, do let me know. Then I can be there to meet you. We're at Raffles City Tower, which is on top of Raffles City Shopping Center, City Hall MRT. Yeah, we have an office there on the 7th floor. So some of the stuff of services that I provide would be the daily news updates by WhatsApp, as I showed you earlier on. The weekly data table, so that's by WhatsApp. Daily technical views, so yeah, like what you saw, earlier today. Advice on trades, yeah, that will be every day. Free one-to-one coaching for clients just getting started out, or if there's an indicator that you want to learn, or you want to take a look at a certain product that you want to explore into, but you're not too sure. Maybe you're in FX trading, maybe you're thinking about moving into some index trading. Yeah, I'll be happy to coach you for your starting portion, and then progress you from there for sure. So we can do that face to face, or through Zoom, possible too. Yeah, and obviously I'm contactable even after office hours. Might not reply you super fast, but yeah, I would definitely try to reply you even after office hours if you got any queries. Otherwise, if you don't have any urgent matters, then you can call our dealing desk or our IT desk if you got any platform issues, for example. So the other thing is that we have this Trading Central. It's actually a research portal. It's available on MT5. It gives you some views on the FX pairs, indexes, all that kind of thing. So you can just take a look at it, just to see what other people are saying. They have a website and all that kind of thing. So yeah, they have analysis of a lot of stuff. So it's available on MT5. You can open an account, and you can have this resource available to you. If you're a client also, we do have the daily commodities update. So we have an analyst going through some of the basically crude oil, gold, and yeah, some of the commodity products. So yeah, he just covers some stuff. So it's something that you would receive by email. Yeah. The other thing is that we have Autochartist, which is a tool on MT5. It works on the desktop. That will be the best one. Then it will draw up some ascending triangle, wedge patterns, basically candlestick patterns lah, and better to help you give a view lah. Otherwise, we do have the email version that you can take a look at. They will send you emails to take a look at lah, descending triangle, channel down, this kind of things. We still have refer a friend promo. So yeah, if you refer a friend and he starts trading within a month, you actually have a referral fee lah. Singapore $88. If it's MT5, we'll credit it in US dollars lah, as it's a US based platform. So Besides FX, besides futures, we do have CFD as well. We have CFD on the 13 indices, about 80 US shares now, 33 SG shares, and also cryptocurrency as well. We also have a few commodities as well there, like crude oil, sugar, yeah, cotton. So yeah, I mean, if you're interested in looking into some Bitcoin, for example, it's pretty hot right now. Yeah, can get started with us. Um, we have free live data price feeds, so you don't have to pay for any of the price feeds to look at the equity prices or index prices, crypto prices. So it's on MT5, which is 0% commission. We don't charge anything on any of the products there. So basically, if the equities, indexes, crypto, we don't charge any commission at all. So yeah, as you can see, we have great charting software, and we are constantly adding more products along the way. So more equities along the way to just because, yeah, adding more stuff. Besides that, we have futures trading, which is on our Philip Nova platform. So if you're interested in some of the futures products like indices, or if you prefer a more regulated product rather than OTC, yeah, regulated product, then you can take a look at some futures. We have some currency futures, index futures, commodities futures lah. All right, so I'll just leave. That's basically the end of the webinar. Thank you very much for joining us, joining me, and hopefully, the insights was good for you, and hopefully, maybe you have a better idea on how to get started trading, or if you're trading, you have better idea on where the markets are, going to in the next few days or months, weeks. So yeah, I'll just leave this side here, take some questions. So yeah, if you want, you can take down my mobile number, give me a call, tomorrow or any other day. Yeah, ask me questions, or if there's anything that you want to ask, maybe you want to get started. Yeah, otherwise, the QR code is here. If you want to open an account and get started trading, if you like what you see, the platform, which honestly MT5 is very user friendly. Yeah. Okay, so we have one question here. Says, can you trade on my behalf if I open an account with you? So no, we can't trade on the behalf. We're not a hedge fund. We're a retail broker. So all the decisions would have to come from you. For MT5, it's a 0% commission platform. So unfortunately, you have to place the trade on your own. So it's a self-execution platform. For futures, we do charge commission to clients because yeah, basically it's an exchange traded product, and there's some cost cost there's a cost price involved. So yeah, we do charge higher for coin rates, but unfortunately for MT5, it's a self-execution platform. So yeah, I will not be able to trade on your behalf for you as well. So yeah, hopefully that answers your question. Uh, okay, so another question we have is does this platform have any way for me to limit my losses automatically? I do not want to wake up and realize I lost all my money because of market event. Um, so obviously, when you open a position, you should straight away put a stop loss. Or if you're putting a pending order, let's say you're queuing to buy at a certain price, you also can put your stop loss and take profit, and you can go to sleep. And then if they triggered your order and it moves for some reason down, yeah, it should hit your stop loss and your losses will be minimized. As long as you have that stop loss, whether you placed it when you have an open position or when you placed it at a working order, you shouldn't have an event where you wake up and all your money is gone. Yeah, so uh don't be worried. You can actually also tell the system how much losses you want to take, and the system will cut at that amount when it reaches that amount of losses or that certain price that you want to cut out or you want to take profit. For example, maybe you have an open position and the price went up, you go to sleep, the next day you wake up, the trade will have automatically closed, and then you will see the necessary profits credited to your account. Next question is, how much is the minimum amount would you recommend to put in to start trading? So it depends on what the amount that you want to get started. For me, we have down to micro lots, which our margin percentage is 5%. So basically, the micro lots are $1,000. So 1,000, like let's say you're trading 1,000 euros to the US dollar. So 5% would be $50 lah. So for me, profits are a little bit slow when you're trading micro, so I think mini size would be a good place to start. So the mini margin size would be 500. So you need at least 500 US dollars in your account to start trading. So um, the recommended would be somewhere between, I would think, 1,000 to 2,000. There is no minimum amount that we would require you to put in. So we just top up whenever whatever you're comfortable with, or the amount that you want to trade. Yeah, then just put that amount. Another question we have, is it possible to be a full-time trader? For me personally, I mean, this is my own opinion. I think being a full-time trader might be a little bit difficult. I feel that if you have a full-time job and you're just trading at the side, I think that's better, because at the end of the day, you got bills to pay, you got stuff to pay for, and trading you might not be profitable every single month. Some months might be a bad, you might even be negative, for example. So to me, that's not very practical in that sense. So I think that having a full-time job and then afterwards doing trading on your own, I think that's more ideal for me, than hoping, because if yeah, like I say, if you're negative in amount, then it's not great. Yeah. mm, yeah, so I think it's possible to be a full-time trader, but it'll take a lot of work, and yeah, luck probably to be positive all the time. The recommended is, if you turn 10 to 20% of your trading account in a year, that's pretty good. If you can survive on that, yeah, sure, I guess. uh yeah, I guess then you can be a full-time trader. But if you're turning 100 or 200% of your account in a year on a consistent basis, maybe like for the last 4 to 5 years, you've been turning, uh, flipping your whole trading account, more than 100% upwards, then yeah, sure. I guess maybe full-time trading might be suitable for you. Another question, how to get your daily updates. So, yeah, obviously open an account with us, be one of my clients, and then start trading with us. And then I will be very, very happy to send you those updates that I do for my clients on a daily basis. And then hopefully you'll get a better idea of the market, and hopefully you'll be more confident when you place your trades. Okay, I think that's about all the time we have. If you have any more questions, or I didn't answer your questions, do feel free, to drop me a text, drop me an email, ask me something, sure, no problem. I'll be happy to answer you all your queries. Uh, and yeah, thank you very much for attending my webinar today. Hopefully it was insightful for you. And hopefully, I hope to work together with some of you. And then hopefully, we can have a good relationship, and I help you, you help me lah. So yeah, see you guys soon. Thank you.